Welcome to the Juvo Leads video blog post series, How ROI Tracking Drives More Revenue. Let's jump right in. The problem. Business owners want to know their overall ROI and how much revenue each campaign is generating. But with the tools previously available, neither they nor their marketing agency could get this information. And here's why. Most everyone uses Google Analytics and/or Google Ads for reporting. But the problem is both stop at goals or conversions. And as we all know, not all goals or conversions are actually leads. For instance, analytics goals can't distinguish between spam calls and legit phone leads, nor can it distinguish between form submissions and legit ones. Because of this, it's hard to say that conversions or goals that we see in analytics or Google Ads are actually leads. Next, we know that not all leads convert into clients, and this has been a huge missing piece of the puzzle for a long time. The difference between converting 15% of leads into clients versus, say, 50 can be the difference in millions of dollars in revenue for even the smallest of local law firms. Finally, the last piece of the puzzle is knowing the difference in revenue for each client. Some clients, say, for instance, a small injury client for a PI firm might be worth maybe $2,000, whereas a big car accident case could be worth a few $1,000,000. Knowing the difference in client revenue is important when optimizing campaigns. This is data that e-commerce businesses have had for a little over 10 years now and allows them to be much more efficient with their marketing. Let's take a look at the data that e-commerce has versus the data that lead generations businesses work with. E-commerce businesses can see not only clicks and goals conversions, but also sales and revenue data. When, say, for instance, a $20 widget is sold, this data is showed right in Google Analytics. Now compare that to how lead generation businesses work. Using analytics, they can only see clicks, spend, and/or goal conversions, just like the e-commerce client. But they can't actually see lead data, nor can they see leads that convert into cases, and nor can they see the revenue that these cases bring. And this is a huge problem, one that we solve. To solve this, we need to do two things. One, we need to track every lead. And here's how we do that. Juvo Leads combines dynamic website call tracking with native form tracking and optional live website chat to capture and track every lead that comes into a website. While every Juvo Leads license includes call tracking and form tracking, not every website chooses to use our live website chat. Next, we need to capture client and revenue data. ROI data is captured once we collect everything else. And here's how we collect that. Business owners get lead email notifications and optional text messages for every phone, form, and chat lead that comes into their business. Each email has a link to the lead tracking dashboard, and when they click, they see something that looks like this. From here, the website owner, the business, or their staff, or even their marketing agencies can set the status to signed client if the lead converts into a new client, and then assign an estimated revenue value to that client. This process is usually handled one in two ways. It's either the firm or the business owner enters that lead data when the clients convert, or at the end of the month. It really depends on the business. Next, what we see is that a lot of marketing agencies actually take on this role for their clients and do the updates for the lead statuses and the estimated revenue on the monthly client calls. And I know what you're thinking. This is a lot of work, so why should I do this? Well, two main reasons. One, it's really going to improve your ROI, and two, it's going to drive revenue. But let me show you. Here's the Google Ads data for an Albuquerque PI lawyer that most agencies and business owners use to make decisions. We can see spend, clicks, and goal conversions, but that's about it. Based on this data, what changes would you make? Feel free to pause it here. So you probably didn't pause it, and that's fine, but I think the answer is pretty obvious. Based on this data, you'd think that the general PI campaign is the best one. See, it has the most conversions, and that maybe you should allocate more budget to it. But now, here's the data you see with Juvo Leads. Looking at the Google Ads data alone, you'd be right in thinking that general PI campaign is the best, and maybe you should allocate more business to that one. But with Juvo Leads, we see that number is deceiving. That's a campaign that really brought the data in. It's the car accident campaign. But had it not been for Juvo Leads, we wouldn't have known that. Now let's take a look at what changes this law firm's agency actually made. The agency here reallocated the ad budget to two of the higher performing ROI campaigns and completely stopped the pedestrian campaigns. The agency stopped optimizing for leads and instead optimized for revenue, and it paid off. But it's important to note, if you only looked at the clicks and the goals conversions, which are both available in Google Ads, this agency would have made the wrong decision. Overall, clicks are down and conversions are down, but the most important number, revenue, is up. Let's compare the 2 months. With the data from Juvo Leads, the marketing agency using the same ad spend was able to drive an additional $94,000 in revenue, as well as increase ROI from 14x to 29x. They literally doubled it. Whether you're an agency that wants to double your client's ROI or you want to drive more revenue for your own business, sign up for a free 30-day trial now. If you have any questions, feel free to start a chat with Amy down below. Thank you.